Hi there, I'm Tyler Bollhorn, and this is the Stockscores Market Minutes for June 4th, 2012. This week's topic, the next trade. Before I get into that, a reminder that you can subscribe to the free weekly Stockscores newsletter at stockscores.com/newsletters.asp. All right, the next trade, what do I mean by that? Well, it's easy to talk about the trade that you should have done, and there's a tendency for investors to take what they should have done and carry that forward. They're often making their next trade based on the trade that they should have made before. But instead, what you have to do is look at the market and not consider what has happened, but what is likely to happen next. So if the market's been very bearish lately, in this case, that's what we've had this past week, well, maybe the next trade is actually to buy a bounce as opposed to be going short. I mean, you should have been short already. And looking forward, you have to think about what is likely to happen next. Well, let's try and figure out what is likely to happen next. Here's a chart of the S&P 500 on a daily basis. We're going to look at multiple time frames this week. And you can see that we've had some pretty decent selling the last 4 days. That has taken us down to the bottom of the channel where prices will probably bounce back in the short term. And we shouldn't overstate that this market is bearish. But in the short term, there's probably a good chance that prices are going to bounce back. Now, when we look at the longer term chart, now this is a weekly chart going back 5 years, you can see that we've got quite some distance until we're down at the bottom of that slowly rising upward channel. So I think that while we might get a little bit of an upward move in the very short term, the next few days, there is still considerable downside risk, probably about another 10% before we hit good solid support on the weekly chart. Well, in the TSX, we've got a similar situation and we've got that downward sloping channel, but we aren't really near support on the downward channel. We are at more of a horizontal level of support. And so we probably could go up or down. It's difficult to call. A lot of it is going to depend on what happens with gold. We'll talk about that in just a moment. However, on the weekly chart, we see a situation where the tops are falling quicker than the bottoms, and that is a sign that the sellers are actually getting less enthusiastic about selling Canadian stocks. Now, if we break through that green line, then all bets are off and we're likely to head lower. However, there is a good chance that we bounce here and actually start to move up and test that resistance at the red line. Again, the key will be with what happens with gold, and I'll show that in a moment. The fear index is in an optimistic pattern. This is the VIX. VXX is the ETF. You can see there we've got rising bottoms towards a flat line of resistance. This looks to me like it is likely to go higher in the future, although in the very short term we could see a pullback. Bonds have gone up in the last little while. It was in a pennant pattern last week. It broke out of that pennant pattern to start this past week and has moved higher from there. It is heavily overbought, and I think there's a good chance it will pull back in the short term simply because the buyers have pushed it up too quickly. But you can't argue with a bull trend, and that's what's happening in the U.S. Treasury bond market. U.S. dollar is also in a bullish trend, but also in a little bit of a pullback phase here as it comes back to its trend line. Money is moving into the safety of the U.S. dollar. That's not really a good sign for what's happening in the world, although it may see a little bit of pullback here in the short term. Now gold, long-term bearish because early in May we had a break of the long-term upward trend line, and that caused me to be bearish in the long term. Now when the U.S. employment numbers came out last week on Friday, we had a disappointing number there, and that made many people think that we were going to see more quantitative easing, and that's what caused the market to gap up on gold. It is now testing its downward trend line. Now notice back in the third week of February, we had the market actually break to the upside there and then fail on that breakout. And that big down red day was the day that Ben Bernanke sort of discouraged the idea that there would be more quantitative easing on the way. And that really hurt the Canadian market. Anything based in commodities was hurt because of that discussion. Well, now we're starting to get the opposite. The market is again looking for future quantitative easing. If there's any inkling on the part of the market that that is going to happen, expect that gold will move up through that red line. If that happens, we should also see some support for stocks. We should see some support for the Canadian market in particular. I would expect at that point that the Canadian market would outperform the U.S. market. None of this has happened yet, and so it's only speculative at this point. But keep an eye on this gold chart because that's a real critical one going forward. Now, with the slowdown of the world economy, oil has really gotten beat up, really quite oversold here. You can see that it has fallen far below its downward trend line. It hit a new low today and then managed to close above its open and up for the day. And that's a sign that the sellers are a bit exhausted here and we could see price move back up, but I think we should remain bearish on oil. So I'm bearish in everything, but I do think in the short term we could see a bounce back in some things and we could switch from a bearish stance to a bullish stance easily if there is some more stimulus by the central banks of the world, particularly the US Central Bank, possibly also the European Central Bank. If there's a coordinated effort to stimulate the global economy, you're going to see a real quick bounce back in stocks. So I'm a little bit wary of being short. I don't want to carry short positions, big ones anyway, overnight, because there's always that potential that you're going to see a snapback rally. But generally speaking, I do think we have to be bearish about the market right now. Well, that has been the Stockscores Market Minutes for June 4th, 2012. Have a great week in the market and trade well.